Something strange is happening in the silver market right now, and almost nobody is talking about it. Not the mainstream financial news, not your bank, not the talking heads on cable television. But quietly, behind the scenes, some of the most respected voices in commodities are whispering the same number, $100 per ounce of silver. And when you hear why they're saying it, and more importantly, when you hear what's already started moving in that direction, you're going to want to pay very close attention, because the last time conditions lined up like this, the people who knew what was coming didn't just protect their wealth, they multiplied it. The people who ignored it, they watched their savings quietly erode while prices around them climbed higher and higher. So stay with me, because by the end of this video, you're going to understand exactly what's driving this forecast, why it's gaining serious traction again in 2025, and what it might mean for your financial future. My name is John. Welcome to John AG 1.0, and this is one of those videos you're going to want to watch all the way through. Before we get into the meat of this story, let me ask you something. Have you ever noticed how certain big financial shifts seem completely invisible right up until the moment they're impossible to ignore? You wake up one morning and suddenly gold is at record highs, or suddenly your grocery bill is 20% more than it was a year ago, and everyone acts shocked. But if you go back and trace the timeline, the signals were always there. They were always sitting in plain sight. Silver right now is one of those signals. And I want to explain why, starting from the very beginning, so this all makes complete sense. If you're finding value in this breakdown already, go ahead and hit that like button right now and subscribe to the channel. We cover precious metals, macroeconomics, and real-world wealth protection strategies that most mainstream channels completely ignore. Hitting subscribe takes 2 seconds, and it makes sure you never miss content like this. Now let's get into the story. To understand why a $100 silver forecast is circulating again, you have to understand what silver actually is. Most people think of it as jewelry, or maybe old coins sitting in a drawer somewhere. But silver is one of the most industrially vital metals on the planet. It's inside your smartphone, it's inside electric vehicle batteries, it's in solar panels, it's used in medical equipment, water purification systems, semiconductors, and military technology. Silver has the highest electrical conductivity of any element on Earth. That's not a small deal. As the world races toward electrification, as governments pour trillions into renewable energy infrastructure, as electric vehicles go from niche to mainstream, silver demand from industry alone is climbing at a pace that the mining sector simply cannot keep up with. Here's where it starts to get really interesting. Global silver mine production has been essentially flat for several years. New large-scale silver deposits are incredibly rare. The existing mines are aging, and silver is largely a byproduct of mining other metals like copper, zinc, and lead, meaning production levels aren't even directly controlled by silver prices the way pure silver mining would be. So on one side of the equation, you have industrial demand that is structurally growing, driven by forces that aren't going away anytime soon. On the other side, you have a supply picture that is constrained by geology and economics. When you place those two realities next to each other, the foundation for a major price move starts to feel less like speculation and more like simple math. But here's the layer that most people are completely missing. Silver is not just an industrial metal, it is also money. It has been money for thousands of years. Long before central banks existed, long before digital currencies were even imaginable, civilizations across the world used silver as a store of value and a medium of exchange. That dual identity, part industrial commodity, part monetary metal, is what makes silver unlike almost anything else you can invest in. Because when economic uncertainty rises, when inflation erodes purchasing power, when people start losing faith in paper currencies, silver doesn't just benefit from industrial demand. It benefits from an entirely separate wave of investment demand at the exact same time. Think about the macroeconomic environment right now. Inflation has been elevated for years. Government debt in the United States alone has surpassed $36 trillion and is climbing by roughly $1 trillion every 100 days. Interest rates were raised aggressively, and yet inflation remains stubborn in key areas. The Federal Reserve is under enormous pressure, caught between keeping rates high enough to fight inflation and keeping them low enough to prevent a debt crisis. This is exactly the kind of environment where precious metals have historically performed extremely well. Gold has already been responding to this, hitting all-time highs and staying elevated. Silver historically follows gold with a lag and then often outperforms it dramatically. That pattern is playing out again right now. Let me give you some historical context so you can feel the weight of what this means. In 2011, silver reached nearly $50 per ounce during a period of post-financial crisis uncertainty, quantitative easing, and dollar weakness. That was over a decade ago. Since then, the amount of money that has been created globally, the scale of government debt that has accumulated, the pace of industrial demand growth for silver, all of it has expanded dramatically. Many analysts argue that $50 in today's context represents a much lower real price than $50 did in 2011 because of how much purchasing power the dollar has lost since then. Adjusted for inflation, the 1980 silver peak of $50 would be equivalent to well over $200 today, which means that a $100 silver forecast isn't some wild fringe prediction. In historical context, it might actually be a conservative one. Now let's talk about who is actually making this forecast and why it's gaining credibility. This isn't coming from one random commentator with a YouTube channel and a tinfoil hat. The $100 silver discussion is resurfacing among institutional analysts, commodities strategists, and silver-focused research firms who track the physical supply and demand data closely. Organizations that monitor COMEX silver inventories have noted significant drawdowns in registered silver stocks. The Silver Institute, which publishes detailed annual supply and demand reports, documented a physical silver market deficit, meaning demand exceeded supply in the physical market by hundreds of millions of ounces. When you have a physical deficit in a market and you simultaneously have a macro environment that is favorable to monetary metals, and you have a historic undervaluation of silver relative to gold, you have the ingredients for a dramatic repricing event. That brings us to something called the gold-to-silver ratio. This is one of the most important but least discussed metrics in precious metals investing. The gold-to-silver ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere around 15-to-1, reflecting the natural occurrence of both metals in the Earth's crust. For most of the modern era, it has hovered between 40 and 80. Right now, that ratio is sitting above 80 and has at times been over 90, meaning silver is historically cheap relative to gold. Every time this ratio has stretched this far out of its historical range, silver has eventually corrected violently to the upside, compressing the ratio back toward its historical norms. If gold stays near its current prices and the ratio even partially normalizes towards 60, silver would need to be trading significantly higher than it is today. If the ratio moved back toward its historical average, the implied silver price would be staggering. Here's another piece of the puzzle that very few people are connecting. The energy transition is not slowing down. Despite political debates and shifting policies in different countries, the fundamental demand for solar panels, electric vehicles, and battery storage technology is still growing at an enormous rate globally. Solar panel installations in particular are consuming silver at a scale that was difficult to even imagine 5 years ago. Each solar panel contains a small amount of silver, but when you multiply that by hundreds of millions of panels being manufactured every year around the world, the cumulative demand becomes extraordinary. Some projections suggest that solar alone could consume more than half of all annual silver mine production within the next few years. Add industrial electronics, medical technology, military applications, and investment demand on top of that, and you start to understand why the supply side of the equation simply cannot keep pace. What makes this moment particularly fascinating is how few ordinary people are paying attention. The big institutional money tends to move early and quietly. By the time a trade becomes the talk of mainstream media and dinner table conversation, the biggest gains have often already been made. We saw this with gold. We've seen it with certain commodity cycles throughout history. The people who acted when the signals were clear but before the crowd arrived were the ones who saw the most significant gains. The people who waited for the headlines to confirm what was already happening often found themselves buying near the top. Now, I want to be very clear about something here because this is important. Nothing in this video is financial advice. I'm not a licensed financial advisor, and I'm not telling you what to do with your money. What I'm doing is laying out the data, the historical context, the analyst reasoning, and the structural forces that are driving this conversation. What you do with that information is entirely your decision. Every investment carries risk. Silver is volatile. It can and does move against holders for extended periods. Anyone who tells you a $100 silver price is guaranteed or imminent without any nuance is not being honest with you. What I'm telling you is that the structural case for silver is stronger than it has been in years. That credible analysts are paying close attention, and that understanding the dynamics at play is genuinely valuable whether you invest in silver or not. Here's what I think is the most powerful thing about this story from a big picture perspective. It's really a story about what happens when the real physical world of supply and demand runs headfirst into the financial paper world of derivatives and price discovery. The vast majority of silver trading happens in paper contracts, futures, and derivatives markets where far more silver is traded on paper than actually exists in physical form. Critics of the current pricing system argue that this paper market has artificially suppressed silver's price for years, keeping it disconnected from the physical reality of tightening supply and growing demand. At some point, that disconnection has to resolve. It always does. The physical market always wins in the long run because at the end of the day, you can't power a solar panel with a paper contract. And the fascinating thing is that retail investors have already started to figure this out. Since 2021, there has been a noticeable increase in physical silver buying, with mints at times reporting depleted inventories and extended wait times for silver coins and bars. Investors across the world, particularly in the United States, are not just buying paper silver through ETFs. They are taking physical delivery. They want the metal in their hands. That behavioral shift in the investor base is itself a signal worth understanding. So, where does this leave us? The $100 silver forecast is not a meme. It is not wishful thinking from people who are emotionally attached to precious metals. It is the logical conclusion of a supply and demand analysis, a monetary policy environment, a historical valuation framework, and a structural shift in energy and technology demand that are all converging at the same time. Whether it happens next year or 3 years from now or even further out, the structural pressures that would drive silver to those levels are real. They are building and they are not going away. If you've made it this far in the video, I genuinely want to hear from you. Drop a comment below and tell me what you think. Are you already holding physical silver? Are you skeptical of the $100 forecast? Do you think the timeline is going to be faster or slower than analysts are projecting? Your perspective matters, and it helps this community have a real conversation about what's happening in the world of real assets and wealth protection. And if this video gave you something to think about, please share it with someone who might benefit from understanding this topic. Most people are never going to hear this information in a format that actually makes sense. Sharing this video is one of the most valuable things you can do to help someone you care about stay financially informed in a world that is moving very fast. Silver at $100 is back in the forecast. The conditions that make it possible are quietly falling into place, and now you know why. Stay curious, stay informed, and I'll see you in the next video. Sonnet 4.6 Extended Claude is